Welcome to Tesla Daily News podcast on February 7th, 2026. Today we're tracking the stories that can actually move Tesla's business and the stock, demand signals in China and Europe, a key Model Y pricing update in the US, a fresh hint the Roadster is still alive, regulatory and legal headlines around vehicle safety, and what expanding Tesla's footprint in Spain could mean for deliveries. Let's jump in. Story 1. China demand check-in looks better than the headlines suggest. Tesla's China-made EV sales rose modestly in January versus a year ago, according to reporting highlighted by CNBC, despite broader industry headwinds in China's EV market. Here's why investors care. China is Tesla's most competitive major market, and it's where price wars can hit margins the fastest. When the overall market is choppy, Tesla's ability to hold share and keep volume stable is a direct read on demand strength for Model 3 and Model Y, and on how effective Tesla's local manufacturing and supply chain have become. The detail to focus on is directionality. Even modest year-over-year growth in China-made sales in a tough tape matters because it suggests Tesla is not falling out of relevance while domestic brands continue to push incentives. Stock impact. If Tesla is stabilizing in China, that supports near-term delivery expectations and reduces the risk of another sharp round of price cuts. And for valuation, anything that protects automotive gross margin tends to matter more than raw unit growth. Takeaway. Watch for whether Tesla can sustain this trend into February and March, because that's when incentives and end-of-quarter pushes can distort the picture. Consistency is the tell. Story 2. Europe competition is real, and the scoreboard says Volkswagen led 2025. Forbes Mexico cites JATO Dynamics data showing Volkswagen sold about 274,000 battery electric vehicles in Europe in 2025 versus Tesla at about 236,000. Context. Europe has been a pressure point for Tesla as legacy automakers and Chinese-backed platforms expand lineups and as buyers weigh price, incentives, and brand options. Details. Those numbers don't just reflect competition, they also reflect portfolio breadth. VW sells across more segments and price points in Europe, while Tesla's lineup is narrower. Impact on Tesla. This is less about bragging rights and more about what it implies for pricing power. If competitors can keep volume up without heavy discounting, Tesla may have to defend share with pricing or financing moves, which can compress margins. On the flip side, Tesla's potential catalyst in Europe is refresh-driven demand. When buyers expect a refreshed Model Y, they sometimes pause purchases, and that can temporarily soften sales. Takeaway. For investors, the key question is whether Tesla can re-accelerate in Europe after refresh availability improves, without sacrificing margin. If Europe becomes structurally more competitive, Tesla needs either lower costs, more localized demand levers, or additional models to keep growth intact. Story 3. A new Model Y variant price point in the US sharpens the demand and margin debate. La Nación reports Tesla introduced a new US Model Y all-wheel drive version priced at $41,990. Context. Model Y remains Tesla's most important volume and profit engine. Changes to its trims and pricing are among the most immediate, stock-relevant moves Tesla makes. Details. All-wheel drive at that price sits above the base configuration, which suggests Tesla is trying to balance two goals at once, keep the addressable market broad, while steering buyers into higher-priced configurations that can support average selling price. Impact. If this trim strategy works, it can help Tesla maintain revenue per vehicle even in a market where financing costs and competition pressure affordability. But if demand needs heavy incentives to clear inventory, it could be interpreted as a sign that the market is more price-sensitive than bulls expect. Takeaway. Watch whether this variant becomes a meaningful mix driver. Investors should track how quickly delivery times move and whether Tesla adjusts pricing again within weeks. Frequent, rapid pricing shifts tend to increase analyst caution on margin forecasts. Story 4. Roadster lives, at least on paper, and that matters for Tesla's brand and optionality. Business Insider reports Tesla filed 2 new trademark applications that appear related to Roadster logos, including a stylized word mark and what looks like an updated production silhouette. Context. Roadster has been a long-promised halo product. It is not a near-term revenue driver like Model Y, but it's meaningful as a signal. Does Tesla still plan to ship new high-end products, and can it execute on timelines? Details. Trademark filings are not product launches. They're low-cost steps that can indicate internal momentum, marketing planning, or simply brand protection. Impact. The bullish interpretation is that Tesla is cleaning up branding ahead of a real program update, which could refresh excitement and support the narrative that Tesla can still innovate beyond incremental updates. The bearish interpretation is timeline fatigue. After years of delays, investors have learned to discount anything that isn't production confirmed. Takeaway: treat this as a sentiment and execution marker, not a financial event. If Tesla pairs this with concrete manufacturing or supply chain milestones, then it becomes market-moving. Story 5. A safety and legal overhang is back in the spotlight: door handles and escape mechanisms. Gizmodo and Boston.com report on a wrongful death lawsuit alleging a driver was trapped in a burning Tesla after a crash, with claims that electronic door behavior prevented escape. Context: safety controversies can become expensive in three ways: litigation, regulatory scrutiny, and reputational damage that affects demand. They can also force hardware redesigns that ripple through manufacturing. Details: the allegations focus on inability to exit after a severe crash and fire, which tends to draw public attention quickly. Impact on Tesla: even if a case ultimately does not prove a systemic defect, headlines can amplify calls for regulators to require more mechanical overrides or clearer emergency egress standards. That could create costs across the fleet design and future models, especially as other regions look to standardize rules. Takeaway: investors should watch for two things: whether regulators take action and whether Tesla preemptively changes designs or issues service guidance. The difference between a single lawsuit and a broader investigation is the difference between a headline and a multi-quarter distraction. Story 6. China is moving to ban retractable door handles, and Tesla's design language could be in the crosshairs. Multiple outlets including NZZ and MotorPasian Mexico report that China plans to prohibit retractable door handles in new cars starting in 2027 after safety concerns tied to occupants being trapped. Context: China is both Tesla's manufacturing base and a huge market. A design regulation there can become a global template, or at least force region-specific builds. Details: a 2027 start date gives automakers time, but redesigns still require engineering work, validation, supplier changes, and manufacturing updates. Impact: for Tesla, the direct impact depends on which models and markets use retractable or flush handle systems and how easily Tesla can adapt. The broader impact is that regulators are increasingly willing to target design features that trade aesthetics and aerodynamics for potential emergency access complexity. Takeaway: if China follows through, investors should assume some combination of redesign cost and production complexity. The silver lining is that Tesla tends to iterate quickly. If competitors are slower, Tesla may actually convert regulation into a speed advantage. Story 7. Tesla expands retail presence in Spain, a practical demand lever in Europe. El Economista reports Tesla is opening 3 new stores in Spain, in Galicia, the Basque Country, and the Community of Madrid. Context: retail and service footprint still matters for EV adoption. Even with online ordering, physical presence affects test drives, customer confidence, delivery logistics, and service capacity. Details: adding points of sale in multiple regions is a classic demand enablement move. It reduces friction and increases Tesla's local visibility. Impact: this is not an overnight revenue surge, but it supports European deliveries and may help Tesla compete as more brands flood the market with new models. It can also help Tesla manage delivery wave dynamics by improving regional distribution. Takeaway: small on its own, but additive. In an environment where Europe is more competitive, execution basics like stores, service, and delivery throughput become stock relevant. Closing recap. Today's big themes are volume resilience in China, intensified competition in Europe, and Tesla's ongoing balancing act between pricing and margin through Model Y configuration strategy. We also have 2 design and safety headlines to watch: the door handle lawsuit attention and China's planned 2027 ban on retractable handles, plus a lighter, but still notable signal that Roadster branding prep may be progressing. For tomorrow, keep an eye on any additional China sales updates, price, or financing changes that could signal demand temperature, and whether regulators comment on door handle safety or emergency egress standards. If you found this helpful, subscribe to Tesla Daily News Podcast and follow us for daily, investor-focused Tesla updates.